Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host, Joel Alconin, and I have Karl Setzer on the line. He's a grain market analyst at MaxYield Grain. Karl, how you doing this morning?
Doing quite well, Joel. How are you doing today?
No, not too bad here on this Monday morning here. So, we've had some moves in some of the commodity markets. Obviously, the crude oil has had a rough time. Gold's been moving around a little bit. Let's start out with the technicals. How are things looking in the grain markets? Maybe start with the corn market.
Well, on the corn here, Joel, we've had, corn has tried to rally here a little bit. Every time it does, it bumps into some overhead resistance. Gets that going. It kind of limits it a little bit, but then it drops again, and we find support. So, corn is really kind of struggling here a little bit from a technical point of view, and I'm not a huge technical trader, but I do look at the charts. I think there's always a fundamental reason behind a technical move. We've put in what the tech analysts call head and shoulders. We've seen that kind of backed off that a little bit here. So corn has really been range bound from a technical point of view. Soybeans kind of the same thing. We've seen a little bit of a breakout here on the soybeans lately. Went to the upside, excuse me, last Friday, had a good rally, but we look at it, we're just kind of drifting sideways in the soybeans and really range bound between that 975 mark and that 1050 mark, and we just keep trading back and forth between those levels.
When you go in here to the soybeans, I mean, I'm not so much the beans, but going back to the corn chart here, kind of looks like kind of turned the corner here a little bit. Prolonged sell-off made the bottoms in early October. I mean, is a longer-term trend changed yet here in the corn market?
We've tried to. We just the problem with it is, Joel, we just haven't seen any verification with it, no follow through, and that's really made it hard from a technical point of view to get a big movement in the corn. We go back to, we put in those lows in late September, early October, and we've had a pretty good rally. But if we go from the end of October until, now, we've, that 375 to right around that $4 mark has really kept us range bound from a technical point of view, and we just keep, bouncing back and forth in there. We have to get a good solid close on the March chart. I'd like to see something around that 405, 404 mark to say we've turned something to the upside. Conversely, as long as we can hold at that 375, we're finding pretty good support there. So we just keep bouncing back and forth in that tight range there for now.
And so let's start with the corn market. You said you need to see a change in the fundamentals. What are you looking for? What kind of change in the fundamentals would change your long-term opinion?
Right now, Joel, we need to see demand pick up. We have a big crop out here. We know that we had a big crop this year. We're still harvesting. We've had some localized problems, but all in all, corn is pretty good, and we're going to get these updated balance sheets coming out Wednesday morning here that in December, it's not very common to get a big change. However, if we go back in history in 2008, we did see a huge drop in demand of 300 million bushels that went straight to the bottom line. I don't expect to see that again this year. I think we see some, pretty stagnant numbers compared to November. Everybody's looking at January. But really on corn, back to your question, we need to see demand pick up. Exports are running ahead of last year, but we have a bigger crop. We need to see exports hold and pick up and increase. Ethanol is pretty well peaked out. We've had a couple good weeks of ethanol, and then last week we saw production drop off. We'll see those numbers Wednesday, and they could give us some indication too. But all in all, we have a good crop out there. We have adequate stocks. We just need to figure out where we're going to use it at right now.
I mean, you talk about demand for corn and some of these other commodities, and you need to see a steady increase in it. I mean, I mean, where does that come from? I mean, I think I probably eat about the same amount of corn each year, and I think it's the same for a lot of people. Ethanol for production in corn, we're looking for a big ramp up in that. That didn't happen. Really, what factors can really change the demand for these commodities?
The big thing would be global production. Right now, Joel, if we could see, yield loss in South America, and there are some indications that South America will produce a little bit smaller crop this year on corn. Economics down there favoring soybeans, and we had the late soybean planting season in Brazil due to the drought, and all attention there was on the soybean. What's it going to do to the crop and the yield? And in my opinion, I'm looking a little further out. Historically, Brazil is a big double cropper with soybeans followed by corn. With a little bit later harvest, we should see a reduction to corn planting down there. So if we start seeing these drops here and there of corn production, that'll increase the demand for U.S. corn in the global market. To come out and say, ethanol is going to increase, we're tapped out on ethanol at 5.2 billion bushels is about all we're going to put in the ethanol. We don't have new plants coming on. Looking at feed demand, we're pushing corn as hard as we can through these animals. And, realistically, we look at the livestock numbers, they're down a little bit from what we've seen historically. It takes a good 36 months to build a cattle herd from the lows. We've started on that about a year ago, but we have another 2 years to really ramp up our feed demand. So with 2 years to go to see even an increase there, we're going to have to get exports. And that means we have to keep U.S. corn in parity with the global market. And right now we are, but that's the global market's going to drive our corn values more so than the domestic usage, Joel.
Okay, and just looking at the weather. I mean, coming near the end of the season, any kind of weather patterns that are going to be could be affecting prices.
Last Friday, I saw some of the first forecasts that we've seen come out for next year, and we got to realize that this is a long ways out. We've got some winter months to go through, but we look at soil moisture, and right now, Illinois, Iowa, Indiana, we're all fully charged on soil moisture. You look at the drought maps, there's really not a weather threat going into next spring. And some of the very early forecasts are already talking of another El Nino next growing season. Historically, El Ninos are associated with good yields. So right now, from a weather threat in the United States, there's nothing to really be concerned with. I'm focused more on South American weather right now. Conditions in Brazil and Argentina are pretty good. Had a little bit of a rough start there to the planting and growing season on soybeans from drought, but them have pretty much been remedied. If we shift over, though, and everybody seems to forget that Paraguay is a large producer of South American soybeans. I'm seeing some wires here, some reports, yield there down 30 to 50% from drought. So even though we do have huge global stocks of soybeans, we start getting these weather threats in South America, it won't be too hard to cut them numbers down a little bit. So weather threats in the United States are pretty minimal right now, but we do need to keep an eye on South America and what's going on down there.
Where would you say that the most production comes out of from these commodities? From the United States?
The soybeans is South America. The South American markets really top the United States as far as soybean production. For a long time, we were hand in hand, but we've kind of fallen back there a little bit. We put our crop. We've got our harvest done here in October, November on soybeans. We got to look at by March, we're going to have another 20 million metric tons hitting the market. For global stocks will increase by that much from the South American crop. We go 6 months into next September, and theoretically, we're going to have close to that many soybeans added to the global stocks. So, every 6 months, we're replenishing this global supply of soybeans with what would be almost an equal amount, a little bit more out of South America. On corn, United States is still the leading producer of corn. We got to look. South America is rapidly increasing their corn production, and we also have to look at Russia, the Ukraine, Black Sea region, and China. Those countries over there, Joel, are their average yield is still around that 85, 90 bushels per acre in a lot of regions. They have nowhere to go but up when it comes to corn production, and I think we really need to keep an eye on them as moving into more of a global player when it comes to corn values and corn supplies.
Do you keep an eye on the like the live cattle or the feeder cattle markets at all when you're trying to do your estimates for your wheat and commodity prices?
I watch cattle quite a bit. The cattle market here, we're seeing strong demand. We got feeders out here that on their live cattle on the fats, they're still locking in this $140 margin. When corn is $5, you feed it with a teaspoon. When it's $3, you feed it with a scoop shovel, and they're pushing corn into them just as hard as they can. Corn is rapidly replaced. We did have some wheat, as feed grains when we had the high values, but corn is back there again, pushing it in hard. Also seeing in the EU that they're starting to push corn harder in their feed rations rather than wheat. We have heard of some wheat imports into the United States. I think that's more of a political issue of the feeders down there showing the railroad that they don't need their logistics. They can import wheat. Happens every year. But, the cattle prices and looking at them and where the feeders are, it does not appear there's going to be a slowdown in demand from that livestock. And like I said, I think that'll keep growing over probably the next 2 years.
God, could you explain the fundamental differences between the live cattle and the feeder cattle?
Well, your feeder cattle are the ones that you bring in. The reason we're seeing such high feeder cattle prices right now is when we had the drought back in 2012, and the feedlots were the pastures were devastated by that out in the plains. A lot of your cow calf herds were liquidated because we just didn't have the feed to put through them. So that cut our feeder cattle supply way down. Now we're starting to see this scramble to put these feeders back into the lots and fatten them up, and the numbers just aren't there. It is starting to build a little bit, but like I said, that's a long, slow grind to get back where we were, to the cattle we saw back in the early 2000s.
Okay, Carl, you've been in this business for quite a while, right? You've been farming and analyst. How long have you been in this business?
I've been in the on the analytical side for almost 20 years now, Joel.
All right, I just want to get your take on the just the change in the flow of information. I mean, looking at how you analyzed it 20 years ago to the way that you look at it now. I mean, is social media part of it at all, or do you get any good information from Twitter, or just talk about how much things have changed and how you utilize it in your analysis?
That's a really good question, Joel. And 20 years ago, when you wanted to know something, you had to pick up the phone, call somebody. They had to call somebody. You didn't. Email was just coming around, and it sounds like it was back in the Stone Age, but it pretty much was. You just didn't get information immediately. Now, especially with Twitter, you can get on Twitter, and if something happens, within seconds, it's up there. The problem you have with social media, and I'm going to throw this out, is you really got to sort through it on what's fact and what's opinion. There's a lot of diversity there, and you can almost get overwhelmed with information now. And I suggest somebody on social media really needs to pick and choose who they follow, so they make sure that the information they're getting is correct and accurate, rather than just opinions and such like that.
Okay, and who do you follow?
I follow quite a few people. There's people throughout. I try to pick and choose people in different regions of the United States, different regions of South America, North America, Europe. There's just a ton of people out there. You can follow Chicago Mercantile Exchange. I have colleagues that I follow. You can follow the analytical firms. Really, I follow just, I try to diversify who I follow for what information I can get from them.
Okay, so the Merc, if there aren't any individual traders or hedge fund managers or anything like that that you follow?
There are some, from the big brokerage firms, from FC Stone. I have some I follow from Advanced Trading. There's some of the regional ones that I can pick and choose and run through. But mostly, I just have what I would refer to probably as a basket of analysts I can
Okay.
follow. I know out in Michigan, if you want to get some information, and you guys have had her on the show, the Goddess of Grain.
Yeah,
She's a
yep.
good one to follow. She puts out a lot of information. You can go back and forth and just find a lot of different ones.
And before I let you go, I know that Steve Breezy's commitment of traders, gives pretty good information on what the commercials and the hedgers and the large speculators, what they're up to. Have you seen any, overall change in their positions in the grain markets?
We're starting to see some of the funds come back in. We've pushed the corn long position on funds to just over 200,000. Soybeans, we're sitting here this morning with a long position of roughly 55,000. We're short about 7,000 on wheat. But we're really starting to see a little bit more of the funds coming in buying the breaks rather than selling the rallies. And a lot of this has to do with, the fact where we're at seasonally going into year end. I think we'll see the funds hold the positions they have and then come in the 1st of January, reevaluate where they're sitting and see if they want to, add to them then. The general consensus from everybody is we are going to see some fund buying in the first part of January, but right now I think we got to see something change fundamentally and technically to really encourage that buying to take place, Joel.
Okay, Karl Setzer, grain market analyst at MaxYield Grain, sharing his thoughts on the commodities markets. Karl, thanks a lot for coming on. We hope to speak to you again soon.
All right, sounds good. Thanks for having me, Joel.